Hi friends, and welcome to another Arctic Money episode of Risk Reward Matrix, this time fall 2025. Before getting into it, let me quickly explain to you how this thing works. On the y-axis you can see risk. By risk I mean I mean two things. How well myself I can understand the company, and also what I perceive to be the riskiness of the industry, the company where it operates. On the x-axis you will see reward, which basically is my valuation on the company. And putting these together in this matrix, we get a picture, or I get a picture of all the stocks on my watch list and also in my portfolio. How do I see their risk profile? How do I see their reward profile? And basically, logically, this is how I position them in my portfolio naturally. So, without further ado, let's get into it. Let's, of course, start with the upper right-hand corner, where we have a bigger risk profile and excellent reward profile, I would say. Auster, LiDAR sensor maker from the United States, involved in development of robotics. I feel like, obviously, when we talk about this kind of hyped up industry as robotics is, and a supplier in that specific industry, and a relatively small company to add, you understand that the risk is always there. That being said, I feel like this is a company that can present huge profits if everything goes well in the future, and that's why it's so high up in the reward axis and also on the risk axis, presenting one of the hottest, I would say, opportunities in the world we live in, robotics, and what everything is possible throughout the next 10 years. More interested in Auster, go and watch my video on Auster from my channel. And by the way, everything you see here in front of you, I have videos of every company basically. So if you're interested in any specific company, go and search that from my Arctic Money channel. Then we have Kamux. Used car sales currently in Finland, Germany and Sweden. From the chatter, some of people following Kamux, you can see that they are saying that Kamux should exit the German and Swedish markets, concentrate only on Finland. Myself, I kind of disagree, because I know how fragmented the used car sales industry is. It's fragmented in Finland, but much more so in Sweden and Germany. And whenever there is a fragmented industry where is possibilities for consolidation leading to economies of scale, probably, hopefully, that's when my interest peaks. I have made a comparison with Kamux to funeral home and cemetery operators I used to own in the United States and made good money with them. I'm seeing similar things in used car sales, which is why I'm invested in Kamux and why I see the opportunity. That being said, why is Kamux the highest risk profile on top of great reward profile? Well, reward profile obviously comes from the current valuation. I think the stock is really cheap. Why is it high up on risk? Well, they operate in an industry where I say none of the operators have real moat. And obviously when you're investing in a company operating in such an industry, the game is really riskier, and that's why it's high up in risk profile. That being said, investing is always the function of reward and risk, so yeah, that's where the opportunity lies. Then inside the box I have, by the way, you see the box there, you see the circles. These are the best opportunities in the market. I just highlighted for them, so no further meaning with the boxes and circles. Also, there's no meaning on the colors of the names of the companies, if you're wondering. I just put them with different colors for easier for you to see them. Then Hims and Hers, Amazon of Healthcare from the United States. Lots happening around the company. The stock is volatile, but I really believe that this presents a great opportunity too, with healthcare becoming more personalized in the United States market, mainly for people, and how this company is has been able to grow and is likely to grow in the future. I see huge opportunities, but wherever there is opportunities, there is also competition which Hims and Hers needs to tackle. But yeah, very exciting case. Then the first circle, there, flow traders and uranium. I have to say, my portfolio update video will follow, but these two are the biggest holdings I have. So naturally, you already know that these are the biggest and best opportunities I see in this matrix. Flow traders, liquidity provider from the Netherlands, lives on volatility of the markets. Has a great past year if we talk about the stock price, but hasn't done amazingly. Reason, well, there hasn't been much volatility in the market. Obviously, you ask me next, well, will there be? My answer is that at some point there will be. I don't know when, but at some point, yes. They are building their infrastructure, and once it's no longer smooth sailing in the markets, then we see what happens with the flow trader stock. One time in the past, the company has already made big money. That obviously was last time when the volatility really spiked big time. Coronavirus crisis we had obviously was the time, but to me that was a proof that flow traders business model works. And it's obviously, I don't hope another pandemic or anything happening or anything bad happening, but the intelligent investors of you know that S&P 500 will not go 15% up every year. There will be years when something bad happens. That's just how the world works. I am not hoping anything bad to happen. When you are an investor, you need to see the world as the world is and not how you hope it would be. No room for hopeful and wishful thinking if you're an investor. That's why my money is in the flow traders. Then uranium. I have invested in uranium mainly in the physical form through Yellowcake and Sprott Physical Uranium Trust. Also, I have one ETF. The world will need to go more nuclear. There is a need for more uranium mining. That mining will not happen if the price of uranium will not go up. And this is my investment thesis, to put really simply. I imagine the price to go up. Obviously, nothing is for certain. If supply meets demand, the price will not go up, and that kind of ruins my investment thesis. But uranium cannot be replaced in the nuclear reactors by anything else at the moment. It's completely vital, nuclear energy, for our well-being in the world, for the planet, as it's green energy. Nuclear power is something we cannot live without. This was the case before any artificial intelligence data center booms we have been having. This new demand has even increased the needs for uranium mining. Even though uranium is plenty in the world, mining of it is not easy. And basically, I just need one moment in time when it seems that there is not enough uranium around to go for everyone who needs it. And obviously, everyone knows what happens if such a panic spreads, that there is too little uranium to go around. Well, that obviously means the spot price will spike up. And this is when I will make my profits if this happens. Now you ask me, well, Christian, will it happen and when will it happen? I have no idea. I only know that there is a possibility of it. And as I said, if the spot price is not attractive enough, nobody will open up new mines. There will be no new uranium supply coming online. This is none of the mining companies do charity work. They don't extract uranium for nothing. It's a business, and they need their returns. This, as with any other commodity, it's a game of supply and demand. But uranium is unique from every other commodity in the world because it cannot be replaced. Oh well, I'm sure there are rare earth minerals or something else, hot stuff, that cannot be replaced either, but uranium is not replaceable. You cannot put anything else inside those nuclear reactors than uranium. And these are the facts. these two biggest opportunities in my opinion. Let's see how the world unfolds. Then I wanna highlight two other companies. Green Landscaping, relatively new position in my portfolio. Landscaping services in Sweden and Norway mainly. Also some in other countries too, here in Northern Europe. I think it represents a good valuation. The company has seen declining stock price for a long time, and I believe the valuation is attractive. One thing about green landscaping and Kamux, actually, which we already talked about, from this summer until this fall, both have seen pretty significant insider buys by the biggest owners of the company. So go and check those ones if you're interested. But there is Kalliokoski, the former owner, or the owner, one of the biggest owners since Kamux inception. He has returned as a CEO now and also made a big purchase of Kamux stock in the summer. So one news bit about Kamux, they changed CEOs just recently. The former CEO, the biggest owner, returned as in the CEO position himself. And then green landscaping, there has been two big buys by the two biggest investors of green landscaping just recently too. So go check those out. I do watch insider buys and sells. Obviously, they don't determine if I invest or not invest in a company. But obviously, it's something I like to see, that if I think the valuation of these two companies is cheap, I want to see the insiders buying the stock too. In Europe context, actually, I think this is more relevant because, for example, Hims and Hers or Auster, their insiders already have lots of their money in the companies with stock options, so it's kind of like they are already heavily invested in these. This is a kind of the United States model. In Europe, in some or at least in the context of Kamux and green landscaping, not so much. So you need to always, when you're looking at insider buys or sells, you need to understand that things work differently between, for example, United States and Europe. They are they are different markets. So long story short, the context always matters. Then moving on, Greggs, UK's biggest fast food chain, having huge economies of scale. That's why the risk level is low, in my opinion. Presents a good valuation. I really am surprised if I lose money with this investment during the next 5 years, let's say. So might be, obviously, anything can happen in the world. I might have zero returns, but losing a lot of money with Greggs would, in my opinion, require something that I don't know about the company, some scandal or something. I think it's trading at a very attractive valuation for a company that size. Then we have there in the lower right-hand corner, we have Energy Services of America Corporation, Energy Services, Origin Enterprises, Agriculture Consulting Services from Ireland, Alta Beauty, a beauty retailer in the United States, and Biomedical Laboratories, Biomedical Lab Services from Japan. I think this bunch presents good valuations. They are not overpriced, but also their valuations are not super attractive. Let's say. By the way, the risk, where you see the center of this matrix, the risk axis, what it means, that's splitting the reward axis. On the right hand side of the reward axis, I kind of assume that this company will give you 10% or more returns annually. So that is what is required to be on the right hand side, and then on the left hand side, I'm predicting less than 10%. So if we look at the left hand side next, there are a bunch of companies trading close. I would say you might expect close to 10%, but most likely less gains annually. Starting from the bottom, Berkshire Hathaway, well, Warren Buffett, the best company in the world, in my opinion, and also many other value investors might think so. Risk is the smallest as it can be. Not in 10% at the moment. Canadian Pacific Kansas City Railway in the United States, same thing. Amsterdam Commodities could be 10% annually for sure. Trading business of spices, herbs, tea, what you have there from the Netherlands. Louis Vuitton, Moet Hennessy, the biggest luxury company in the world. I feel like, yeah, if everything goes well, it can be 10%, but most likely not more. Same with Crocs, the sandal maker. Then we have, Crocs and Dr. Martens, they're roughly the same. And having, fashion is the riskier industry, obviously, even though I really like both these companies and both have been in my portfolio. They are not there currently, but I have invested in both and made okay money with both in the past. Experian is a data company from Ireland, was it, operating globally? That maybe I could say that Experian risk probably is that not an expert in data industry, I would say. So a personal high risk company for me, but still I want to follow it. I have that company as with ASML, and then Epiroc featured in my video if United States would become more authoritarian country in the future from the political perspective. I did a video recently about that, so interested in those three and that kind of a story I made up with AI. Go and check that video out. Yeah, ASML, obviously, almost or is a monopoly in the semiconductor industry, riding the waves of semiconductor AI industry from the Netherlands. Its stock price has recently gone up hugely. It was a better deal when the stock price was lower, but now after the run-up, problems with valuation. And let's say, like this bunch you can see in front of you, the companies you surely know: ASML, Amazon, Alphabet, Apple, Meta, Microsoft, Lockheed Martin, General Dynamics. These are all hyped up companies. You have their AI, you have their tech, you have their arms industry. Obviously, you understand that these are all hyped up industries at the moment for differing reasons. Great companies of the world, each and every one of them. That's why they are low in the risk axis, some lower than others, but nevertheless, great companies. Companies I would definitely like to invest in, but the investing it's always a game of valuation. There's two things to investing, like what are you getting and how much are you paying for it, and obviously the price needs to be right to make gains. And this is the problem with hyped up industries. Everybody knows these industries are hyped up. That immediately says to me almost that the valuations are gonna be sky high, and everyone knows that, or in most of the cases, investing in the next big thing and the hottest thing out there will not lead to great investing returns for you. That's just how the world of investing has worked since forever. Then Epiroc, as I already told about the other video with ASML and Experian. Epiroc, a mining company from Sweden, presenting like rare mining companies from Europe, but the valuation I believe is high. And also, let's say that the Experian, Epiroc, ASML, they are all a bit high on the risk axis, because I'm not an expert on those. Would need to read more about the companies maybe to get the risks down a little bit, but I haven't done that, mainly because after doing the valuation, I feel like the valuations are pretty rich at the moment. So maybe if their stock prices go down, I will have another look, for example, a bunch of these three, and then determine is it an investment now or not. Then finally, my favorite, Tesla. Tesla is a hopes and dreams company. With current valuation or current stock price, especially. Tesla is a fun stock to watch at. It's kind of like you see where the market is going. Tesla stock price up again, which already means that the market, in my opinion, is overheating. The valuation doesn't make sense. It's all about Elon Musk's hopes and dreams and promises. Nothing concrete there. I know this will piss off so many Tesla investors, but yeah, That's how I've been seeing the company last 5 years, and the stock price has been volatile. Basically hasn't been even great returns for those people who have been invested in, let's say, maybe 3-4 years. Most of them, I believe, is pretty dead money. And yeah, well, Tesla is Tesla. I have been speaking enough about the company and also Elon Musk on my channel. If you're interested in those comments, go and look for those videos. But hey, this is my watch list. This is my portfolio. Portfolio update coming for the winter sometime in the future. This is how I see the market currently, how I see these companies. Please let me know if I can somehow give more content to you in these risk-reward videos. Let me know if you agree or disagree with some of these companies. Always fun to hear other people's opinions. And yeah, let's move on. I have no idea what video is coming up next, but stay tuned for Arctic Money, and I see you in the next video. Bye bye.